Live from the JPMorgan Global China Summit in Shanghai, this is Insight with Haslinda Amin, where we dive deeper into stories that matter with crucial context and sharp analysis. Moody's warns Indonesia's tighter export controls may spook investors, even if they boost revenue and support the rupiah. Danantara CIO Pandu Sjahrir joins us next. China's consumers are still holding back. JPMorgan's China co-senior country officer, Rita will be joining us slightly later on her take on the Chinese market. Plus, AI is racing into drug discovery, but regulators have yet to clear an AI-designed treatment. Insilico CEO Alex Zhavoronkov will be joining us to break down the risks and opportunities. Moody's is warning that tighter Indonesian export controls could harm investor sentiment, raising regulatory and operational risks. This comes after the country announced the biggest shakeup of its natural resource trade in decades, potentially jeopardizing $65 billion of commodity shipments a year. Now, the new framework requires commodity exports to go through state farms under the Sovereign Wealth Fund, Danantara. Pandu Sjahrir, CIO at Danantara Indonesia, joins us exclusively on this. Pandu, thank you for joining us today. I'm just wondering, was Danantara caught by surprise by the decision by the president to form this new export body?
Hi, good morning, Haslinda. Good to hear from you again. Good to see you. Actually, this idea of DSI is called Danantara Sumber Daya Indonesia, and the idea that was mentioned by the president in his speech a couple of days ago is not something new. It's something that we've known a while. The issue with respect to natural resources, too specifically related to coal and crude palm oil, is something that that has been known for quite some time with respect to the issue of under-invoicing, lack of transparency, lack of traceability and accountability. So, I think this recent move will help to alleviate some of these concerns, and I think that's why the president made and announced the move in the parliament a few days ago.
Pandu, why is this export body make sense? I mean, if you take a look at the market reaction so far, even as the idea was being tossed around, we had the JCI slumping 8%. I mean, obviously investors are not looking to the idea very kindly.
Yeah, I think, this is actually something that's very new, something very brave by our president. And to be honest, you have been a very long time follower of Indonesian market and also what's happening in both coal and palm oil. You have to appreciate that in coal, Indonesia is the largest exporter in the world. In crude palm oil, from a supply perspective, we're about 2/3 of global supply. So we're very large producers of these natural resources. And I think the move by our president today to centralize, to create greater efficiency by creating this body, and I think this body, because it's under Danantara, it will be market friendly, it will be for profit. It's also important, and I think you've also been a big follower of Danantara as well, Haslinda. You see what we've done the past year and a half. We want to continue with that trajectory of creating very good governance, a world-class organization, and to be able to create this new company, DSI, to follow that type of characteristic. So I think, market is trying to absorb it. In the next few weeks, we will also announce in terms of how this will work out. The most important thing that we want to underline here is that the market should continue to where it is today. It is business as usual. I think the president already made some speech. In the government, as the policymaker, they'll also do some announcement. We as a body will be an operator. This is also a very important distinction. We will operate based on whatever the government policy is, but the idea is very important. Number one, to increase transparency. accountability, traceability, and of course, it will have to be market friendly.
Pandu, I'm just wondering, if this is about under-invoicing, why not just raise the, I guess, the oversight of tax authorities?
Yeah, so I think you already know, I think the previous governments have tried a variety of ways, but that problem continued to persist. But what's most important, what we're trying to do, and similar to the Danantara, what it was, I think about a year and a half ago, you know, the market also had some perception, some issue. We just have to prove it over time, and that's probably most important. What I do want to highlight, and this is probably most important, we are listening to the players, to the market. We want to make sure that this will be accretive both to the producers as well the shareholders that are involved in some of the companies that are probably listed or non-listed. And we're focusing first on these two commodities, coal and crude palm oil, where in those sectors, we are the largest producers and exporters for this. And we want it to be a success. I think this is most important. Success to the market will also be success for Indonesia. So we are listening very closely to the market. All the feedback that we're hearing from both producers, buyers, traders, these are all important market feedback.
It's about transparency, it's about predictability. I mean, are you concerned that foreign investors will be spooked by the unpredictability of the current president's policies?
I think what he's doing is for the people of Indonesia. I think this is a very brave move, what he's doing. I think it's also the right move. What's important to highlight also is that this clear distinction that this will be an operator of business, not another regulator. The regulator stays with government. Here we will simply act like business operators. So in a business setting, we obviously will listen to market input. I think business has to be business as usual. Yesterday, the Minister Rosan also mentioned business as usual. And I think this is also very important. The success of the market will be the success also for Indonesia. So I think I need to underline and highlight that it has to also be market mechanism. What most important for us is that we are able to trace. There's a good set of accountability and transparency in this market.
Is it making your job at Danantara more challenging, more difficult? I mean, what are you telling investors? How are you building trust and credibility?
Yeah, I think, Haslinda, you've been following us for very closely, and I think our friends at Bloomberg have followed us very closely throughout our journey. We want to thank you for that. And I think you've seen that we have, moved from an organization, from an idea, from a concept, into now a large-scale organization. Throughout that time, too, we've now accumulated over $1 trillion of assets from 1,200 companies. Now we're going to eliminate close to 700 of these companies and consolidate to make a stronger company. On the investment front, I think Bloomberg have covered well. We've committed about 14 billion of investment for this year, both in Indonesia and outside for Indonesia's purpose. I think most important, you just have to show through performance. And I think in Danantara, the first year and a half, we have delivered that. Now, the most important in this new enterprise that we're being asked to create, we will have the same standard. Number one, we have to create and recruit the best people from the market. Number two, we have to create the right system similar to what the market is in terms of system of governance, the business system, and how we operate with the people in the market. And then obviously, three, in the next 6 months, hopefully by first week of January, the first part of January, you'll see us operate in full force. So I think this is good. We have time to create this business, and I'm sure hopefully then I can report to you, Haslinda, how the performance will be.
Well, the thing is, Pandu, Danantara reports directly to the president. I mean, it is only logical that people question its independence. Can you allay those concerns?
Yeah, I think at the end we report to the president, and the president report to 300 million people in Indonesia. So at the end of the day, the level of scrutiny is already there. The level of discussion we have with stakeholders is already there. Now we're being tasked with this new work. We'll try it the best as we can. As you know, our job is to be able to create the best institution that can compete globally. That's all. And I think we have to put this in perspective. We will trade, I think, as the time goes, over 600 million tons of coal that we will trade. In terms of CPO, at least about 35 to 45 million tons per annum, which also makes it a very big platform on its own. We haven't mentioned also other minerals that are there, but we're going to focus on this first two, and then obviously then we'll repeat. Right. So this is not a small undertaking, but what's most important, we're using the same set of standards that we've done the past year and a half. Yes.
Let's pick up on that. You talk about how you're starting with coal and palm oil. What next? What's likely to be next?
Let's focus on what we have today. We just want to do the job well, very well, and that's will be our focus, Haslinda. So step by step.
Do you see challenges in implementing it? What might they be?
The challenges will be similar to the way when we first started Danantara, Haslinda. Obviously, number one, we want to get the best people. And with that, we also need to be able to convince the market through communication, right? And also through transparency in the steps that we're doing. Number two, we just have to create the enterprise itself. So we have a few months to be able to create this enterprise and recruit the best people globally. And that's our job. And then try to make this very similar to what we've done in Danantara, and try to do it even better. I think it's always a learning process, building up the curve, but what has been assigned to us as our job today, we just have to do it very well, but we're going to do it systematically, step by step. And we have been a lot of learning, to be honest, from what we've done in Danantara too in the first few months. That's really great learning for us as we try to build upon this new organization.
Pandu, earlier this week, on Wednesday, I believe, we also heard from President Prabowo Subianto talking about wanting more control over the prices of commodities out of Indonesia. Is there a sense that you're risking, the exit of talent and commodities companies, which may find, alternative markets?
No, I think at the end of the day, we're the largest market for these commodities, the two that I've mentioned, which is coal and crude palm oil. As you can see in Danantara, what we want to be is to be a human capital bank. We want to make an organization that is world-class. And similarly, with respect to this new organization, we also want and share the same spirit. So I'm not too worried about this. Our idea is to be able, as I mentioned to you, to create the accountability, the transparency, to avoid the issues that have hampered us in the past few decades, and to be able to bring success. And when you talk about prices, whatever those prices will be, it'll be good for the market. And of course, then it'll be good for us in Indonesia and for Indonesia. So it has to be win-win, Haslinda. That's what's most important.
Pandu, we've spoken at length on the Patriot bonds when you first initiated it. We're hearing as well that you could be issuing another tranche of Patriot bonds. Can you confirm that?
Well, listen, we're always in the market, whether it's Patriot bond, regular bond, or any other type of third-party capital. Our job is to invest and invest it well for Danantara. This will just simply be part of a capital raising exercise, and it can be in a variety of forms that is market accepted. So that's what I can tell you. And we're going through different processes, and hopefully with that we can invest well for Danantara.
Right. Might you target corporates instead of tycoons the next time round?
Look, at the end of the day, as I mentioned to you, we are always going to be in the market for third-party capital raising, whatever is best for Danantara. I can probably only say that as a comment. But I think what we want to focus today is that with this new task that's been assigned to us by the President, hopefully this will also create a better market for these commodities, and also will create a win-win situation for both the market and Indonesia.
Pandu, 5 months into 2026, we're just wondering if you're planning to release any financial statements. The other sovereign wealth fund, INA, has already done so. What are your thoughts on that? Will it happen?
Yeah, it will happen. I think, as mentioned, that Danantara is a slightly more complex organization. We have about 1,000 companies that is put to us, and we have three organizations. BPI Danantara, which is the holding. We have Danantara Asset Management that houses all the state-owned enterprise, and there's about 1,000 plus of them. And then we have Danantara Investment Management that houses all the new investment from the dividend of these business. We've already mentioned that this will take time because we have to aggregate the assets that used to be reporting under state reporting and state accounting that is now moving to a public form of accounting. And also I just have to highlight too, a couple of the listed companies such as Telkom just recently announced its reporting, or its financial statement recording. So it will take time to go from there and as well to be translated into the holding business, but it will be reported, but it will take a little bit of time.
Pandu, we thank you so much for your time today. Pandu Sjahrir, CIO at Danantara, Indonesia. Up next on Insight, we assess the future of AI-driven drug development, speaking exclusively with the founder and CEO of Insilico Medicine, Alex Zhavoronkov. Keep it here with us. This is Bloomberg.
Think about the companies involved in the public markets. They're very cash rich. The hyperscalers, they have a lot of cash. So they're still getting a lot of respect. The companies that are in the trenches using AI to discover and develop new drugs, they are not appreciated yet, but they will be.
And that was ARK Invest founder and CEO Cathie Wood saying that while all the attention is on the hyperscalers, healthcare and drug discovery is now an underappreciated corner of the AI trade. Well, our next guest runs AI drug development company Insilico Medicine. Joining us exclusively, founder and CEO Alex Zhavoronkov. Good to have you with us.
Great to be with you again.
Yeah, a year on, I'm just wondering what parts of drugs recovery has really improved. What have we seen in the last 12 months?
Well, we have accelerated the pace of biotechnology innovation quite a bit. So at Insilico now, I think, ballpark, we can probably deliver up to 20 drugs a year if we go full capacity from zero to developmental candidate. We now have reached a major milestone that I like to carry on my jacket. We now have performance metrics on all of our jackets. So we just nominated our 30th developmental candidate. That's a drug one step before human clinical trials. Now we have 13 clinical, and we have now 3 phase 2s, 1 phase 2 complete. So we're scaling up, scaling drugs. So much is happening in AI. Of course, we're inventing new algorithms. We're cloning everything, orchestrating, and going towards the pharmaceutical superintelligence. We launched our MMAI gem. That's a new product for other AI companies to come and train their foundation models in our gem to become super intelligent in many areas of drug discovery, but also in sustainability, in materials, in agriculture. More than 1.2 thousand tasks you can learn in our MMAI gem. And we consistently deliver drugs into human clinical trials. So I think that consistently launching and learning, that's our core.
But what's key though? Because you've now IPO'd in Hong Kong, and shareholder returns will be crucial. They want to see their return on investment. What are the key points you would like to deliver?
So sure. Well, first of all, don't buy, sell, or take any drugs based on what I say. My job is to develop Insilico into a very sustainable company. So I actually want to reach the point where we demonstrate profitability. We're not that far from that.
What, 12 months, 24?
I don't want to make any claims on live TV, but we're getting there, and I really hope that we will be able to demonstrate that a frontier AI drug discovery company with massive investments and performance in many benchmarks in drug discovery with frontier models also launching drugs consistently can also be profitable. That would be a really cool feat, right? So our job is to consistently launch drugs into developmental candidate and sell them. License them to pharmaceutical companies. That's our job, and of course progress through the pipeline. What excites me the most right now are some of our drugs that have dual purpose. We're targeting aging and disease at the same time. And when you are doing that, at some point in time when those drugs get approved, you might be able to touch everybody on the planet. So I'm a big fan of GLP-1s. I'm on them myself. I'm on tirzepatide and semaglutide. Those are some of the best drugs invented by humans. But we want to develop the next one for the brain, for your heart, for your lungs, so that everybody on the planet is a customer. That's a way to build a trillion-dollar company.
Alex, you also grabbed attention with your deal partnership, if you wish, with Eli Lilly. I mean, this deal, I guess, is worth about, what, $3 billion? That's the number out there. Where are you with that?
So one of the reasons I really love Eli Lilly, and everybody should while I'm on their drugs myself, is because of their focus on longevity. So if you think about the therapeutics that target chronic biological processes that if taken under control can significantly improve the quality of life, those are the ultimate longevity and lifestyle medicine. So we're learning from Lilly. Of course, we licensed a few of our early stage drugs and we're collaborating actively, but we're also learning. The most important thing that was overlooked by the investors so far is that we formed the world's first longevity board under our board of directors, led by Andrew Adams, one of the pioneers of longevity biotechnology in the pharmaceutical industry. And now we're learning how to really create those ultimately high-impact drugs that may give you 2, 3, 4, 5 years of healthy, productive life and may actually help you regain some lost function. That would be the ultimate goal of Insilico, and that's why I'm extremely excited about those partnerships. It's very financially lucrative, but we are actually interested in adding more years to healthy quality life for everybody on the planet.
Alex, the deal with Eli Lilly, is it a reflection of Big Pharma finally buying into the idea that AI-generated molecules, for instance, are trustworthy, or is it kind of like an experiment?
It's not an experiment anymore. Now we basically turned into SpaceX of drugs. When you launch 30 developmental candidates and 13 propagate into the clinic, and you've got multiple phase 2s ongoing and some complete, you can consistently launch basically almost to orbit, that's the developmental candidate, and go to the moon many times. People trust you. So we closed, I think, around 10, maybe more deals this year alone. We started with a deal with Servier in early January and unscaled. So Lilly is a very important milestone, but which shows consistency. We deliver consistently. Takes us 9 to 18 months to get to developmental candidate, and then we license out ultra high quality drugs.
All right, we'll keep pace and track developments 12 months from now. Alex Zhavoronkov, founder and CEO of Insilico Medicine. Well, still to come from the JPMorgan Global China Summit, we're talking markets with the bank's co-senior country officer, Rita, who tells us exclusively where she is seeing strong momentum. Keep it here with us. This is Bloomberg.
Most likely have to pay back $149 billion. All they had to do is put a little sentence in there, half a sentence, saying that any monies paid don't have to be paid back. You know, you're talking about the people in many cases that hate our country. Give them back money. It was a terrible decision. And it's not going to affect because we do the tariffs a different way. The tariffs are what's bringing in all of this money. It's really made our country rich, modernly rich.
President Trump saying the recent ruling against many of his tariffs could force the U.S. to refund about $149 billion pending a Supreme Court review. Meanwhile, APEC trade ministers are meeting in China today against a backdrop of geopolitical turmoil, with relations between the host nation and Japan strained over Taiwan. We'll be watching for any potential engagement between their trade chiefs. Our Chief North Asia correspondent Stephen Angle is at the summit in Suzhou. Steve, could there be a bilateral ministerial level meeting between Japan and China there? And what's really at stake?
Well, so much is at stake between relations, obviously, between Japan and China that has been frozen essentially since Prime Minister Takaichi made those comments in early November, essentially saying that Japan could potentially deploy its own military if China were to invade Taiwan. That did not sit well, to put it mildly, with the Chinese. There's been no ministerial level talks between China and Japan since that. They want Japan to apologize and to retract those comments. Japan has refused to do so. And then Akasawa-san, who's the trade minister, is here at the APEC trade ministers meeting in Suzhou. He has told reporters already that, of course, it's natural to seek communication with his counterparts, the host nation, China. That would be the Commerce Minister, Wang Wentao. So far, no indication that there is going to be a bilateral, but that would be the big news coming out of this, really what is the first major ministerial level meeting of the APEC calendar that will obviously lead up to the APEC summit, Leaders Summit in November in Shenzhen. And trade, obviously, as you just prefaced, is such a hot button issue right now globally, not only after those tariffs from the White House last year, but also because of the supply chain shocks and the oil price shock caused by the closure of the Strait of Hormuz and the overall war in the Middle East is a big concern of many Asia-Pacific trade-dependent nations. APEC just sent out its projections for GDP growth for the next couple of years. They're saying last year it was about 3.1% overall GDP growth. This year will likely be about 3.1. Next year, 3. But in the short term, could go as low as 2.7% because of those shocks that the global economy are seeing right now. So we're here covering it. We're going to get a pulse check from U.S. officials a little bit later on today. We're also going to talk about some of those other regional issues, like what's happening in Indonesia, where the president essentially is going to be handing off the pricing mechanism for its commodity exports to a state-backed or a sovereign wealth fund-backed entity. That's an interesting story that is developing as well.
That's right, a story that's actually spooking investor sentiment. And another question, Steve, is whether or not Taiwan's trade minister will get a voice there, or whether, you know, that voice will be muzzled by China.
Well, that's right. We are watching that because the trade minister of Taiwan is here. But we all know that China, maybe, I mean, some of the allegations are that they try to limit Taiwan's participation on the global stage. Of course, APEC is sort of an economic body. Taiwan has been a member of APEC since 1991. So they have a rightful they have a right to participate in APEC. We have to see, though, if there are efforts, obviously, as China is the host nation, whether they allow Taiwan's representatives here to speak freely, to seek out, dare I say, bilateral talks here on the sidelines, if you will, of APEC. But that's another side story that we'll be watching closely. How much participation, how much voice will Taiwan here have at APEC as a member participant, member economy?
Steve, thank you so much for that. Our Chief North Asia correspondent Stephen Angle there for us in Suzhou. Now, China's growth slowed across the board in April, with investment resuming declines and domestic consumption weakening. Retail sales rose just 0.2% in April. Household spending remains constrained by weaker job prospects and slower wage growth. To help us put China's slowing consumer demand into perspective, we're joined exclusively by JPMorgan's China co-senior country officer, Rita Chand. Rita, good to have you with us. So, consumption still pretty lackluster. What will it take? What's the catalyst that will turn it around?
Look, China is the second largest consumer market in the world, with 400 million of mid-income population. It continues to be a hugely important market for both our local clients as well as our multinational clients. So consumption now comes with seasonality factors because, as you're aware, the 6/18 is coming, June 18, as well as in October. We have other promotion activities, which is why we cannot just look at monthly consumption data, but rather, an overall sentiment. And what we've seen really is that this year it has been a steady recovery with interesting trends that are reflected as part of this summit. The first thing I would say is the transition from being price competition driven to some premiumization and innovation-driven spending, especially in experience-led travel. And what we've seen here, and thank you, Haslinda, for spending time at our summit, because we have a lot of collaborations here with various corporates, a lot of them being consumption companies that have rolled out their innovative products here. And to me, that is really generating that new demand rather than satisfying current demand.
You talked about how there is some improvement. People point out, though, to that deflationary psychology amongst Chinese consumers, and that isn't going away simply because of the property sector, perhaps, which is still in the doldrums. What's your take on that?
So real estate sector has been going through a challenging period in the past few years. Many investors commented that they have probably seen the bottom of it this year. Many first-tier cities have stabilized in both price and volume. However, it is a long journey, as we all anticipate. However, the consumers need to come to terms with what is that disposable income level that will stimulate spending, which is why I do think the policymakers are trying very hard as well to introduce policies that would stabilize that market.
But might we see finally the big bazookas, big time stimulus? I mean, we've been waiting for a turnaround in consumption for a very long time. It hasn't happened yet.
The consumption patterns have changed a lot, as you would agree. We thought about housing demand and all the other traditional channels that we would normally look at. But in fact, people are spending more on, for example, outdoor activities, healthcare services, education, and our needs have changed. And so we do see the recovery in those subsectors. So it has been quite diversified.
And also in the markets, we see perhaps, increased interest, increased appetite in the Chinese market. How are you positioning JPMorgan in China?
Right. So JPMorgan has had 2 consecutive years of over 20% growth, we are very proud to say, in the China franchise. And that's really driven by a few things. I would say, first of all, in our securities companies, you've seen all the M&A and IPO activities, and that's really a direct result of Chinese companies going global. And how we can serve them is not only in the capital markets, but really for them, when they go overseas, they would need payments, they would need hedging, they would need all kinds of advice for them to navigate these markets. And so we see tremendous growth opportunities in the corridor still. And then on the other hand, you see how many equities investors and debt investors are here with us today. We did a survey this morning, and many of them are first-timers at this conference. And it really points to the strength of the market and the interest level in the market. And with Stock Connect, our QFII and QFII, and all the mechanisms that make it more convenient for investors to diversify their investment choices, we are well set up for that.
I'm wondering what is top of mind for investors when it comes to the Chinese market. I mean, increasingly we're seeing money gravitating towards China, even away from India. What are they asking you?
Sure. So honestly, AI is the word. AI and technology,
so innovation?
and with that innovation is definitely top of mind. And we have a very strong speaker lineup this year, and Jansen spoke this morning. But that is a rapidly evolving landscape that people really need to come to terms with. We've seen a lot of focus on energy and sustainable energy, which China is a leader, and there's a lot of focus on oil oil price and the impact on that. And then I would say third thing, as we discussed, consumption and real estate continue to be a topic.
And given how China is back in focus, are there plans to perhaps expand your presence in China? Are you looking to hire more? What areas might that be?
Yeah, definitely. We actually doubled our headcount over the last 8 years as we look back, and we are very much on the lookout for talent where we need them. And we continue to build out both our onshore, where we are now fully 100% ownership of our securities company, corporate bank, futures, as well as asset management, but also following the footprint of these companies overseas. So we've established now corridor bankers in LATAM, in Europe, in the US, and wherever they go. So we really want to grow with the companies from China to global, as well as really serving our multinationals who are already in China and who are coming to China, and that is very exciting.
Can you share a number, perhaps, in terms of manpower, how many you might be hiring in the next 12, 24 months?
Well, we are definitely on the lookout, so submit your resume. But it is, and we have made a number of high-profile hires, as Bloomberg has reported in the past year, both in the investment banking business as well as in all our other pillars. So again, every of those pillars are growing very nicely and healthily, and so we really look forward to that.
What's the biggest risk for the business in China right now? Because from the indications and the optics from Beijing last week, relations between the US and China seem to have improved. There's some stability there. How do you view the risk for the Chinese market and the business here?
Look, geopolitics continue to be quite complex, and we continue to navigate that every day, as well as our clients as well. So I would say that the Xi-Trump meeting set a good tone, and that ultimately is not about solving all the problems on day one, but continuing to engage very actively. And that is actually I think, a very positive result from the engagement last week. And occasions like this, and JPMorgan acting as the bridge of connectivity between the China and the US, has always been super important to us.
Rita, always a pleasure to have you on the show. Thank you for your time today. Rita Chan, China Co-Senior Country Officer of JPMorgan. Now, still to come on the show, Zuma Wealth founder and CIO Terri Spath will be joining us to talk markets as traders try to balance AI euphoria with war-driven inflation concerns. Keep it here with us. This is Bloomberg.
You have bond rates going up, inflation is a little bit higher than people thought. But I'm not surprised. The notion that somehow people said they'll never go up is the wrong notion. And so companies like us prepare for higher rates, lower rates, and figure those things can happen. They could be much higher than they are today.
And that was JPMorgan CEO Jamie Dimon speaking exclusively to Insight yesterday about inflation and interest rates. Let's get more on the market risks with Terri Spath, founder and CIO at Zuma Wealth. Terri, good to have you with us. I mean, we have bonds like the 2007s and equities roaring like the 2000s. How are you making sense of the markets today?
I am old enough to have been around for both of those markets, and even before that, and what our dominant thesis right now in the U.S. stock market is that there's clearly two competing forces. On the one hand, we have these euphoric, I would say rationally euphoric, stock market based on this powerful AI-driven optimism story. We anticipate real productivity gains from this, continued strong earnings power in large cap tech, meaningful CapEx cycle, and that's propelling these magnificent earnings, and that's what's pushing the stock market higher, as you've noted. But on the other hand, I don't think that we can ignore that this is still a highly macro-sensitive market. And oil remains the key variable because it feeds directly into inflation expectations. That drives Federal Reserve policy. And so we are having that tug of war in the market right now between extraordinary optimism, as you pointed out, around AI and the productivity gains there versus the reality of inflation sensitivity and Fed policy. So those are the key issues that we're focused on right now. We think that results in a market that's higher 6 months from now than it is today, but that's going to be punctuated with stutter steps from the fact that we do have some real inflation in the global economy right now, and particularly here in the U.S.
Terry's also about earnings, right? They've been driving sentiment higher. Point of the matter is that financial conditions are changing, they're getting tighter, and at some point they will start impinging on earnings.
So, yeah, I think that inflation clearly is something, again, that we're paying attention to. But what's really been driving returns recently are the earnings numbers and the outlook that we've seen. And when we look at what's driving those earnings, it appears to be AI and the productivity gains that many companies expect from that. We think that AI might be doing for markets today what low interest rates did for markets over the last decade, which is providing a really powerful narrative that's capable of justifying the elevated valuations that we see out there. So we say that because the market is able to keep climbing the walls of worry that we've experienced. Despite tariffs, we keep seeing markets go up. Despite geopolitical tensions, higher oil prices, sticky inflation, elevated rates, those have all injected volatility into the market. There all continue to be risks that keep us up a little bit at night, but we believe that the market, again, has the capacity to continue to march higher. But we're not immune to higher inflation, so we are paying attention to the fact that this could potentially weigh on growth going forward, as you pointed out.
So, Terry, how do you play the AI space right now?
Well, I mean, I think that, we want to be valuation sensitive, of course. So, one of the concerns that we want to own more than just AI. We've talked a lot about AI up until this moment, and I've been talking a lot about AI. And I think it's important to have that exposure. But a concern that we have, and I think it's a valid one, is that we've had a narrowing of the investment markets more recently. At the start of this year, there was a much broader market rally. We were seeing a lot more sectors as well as stocks participating in the gains. The equal-weighted S&P 500 was doing better than the market-weighted S&P 500 for the first few months of this year, and we've seen that reverse. So that is a concern, because if you just have a few stocks, the risk of them disappointing can drag down the whole market, and so that creates a risk. So we think that you want to participate, have exposure, obviously, to this tech growth that we're seeing, but not abandon ship for everything else that's out there, because there's a lot of opportunities to benefit from earnings growth across the board. We're seeing strength across the board. Most sectors in the S&P 500 are doing very, very well. So we would have broad exposure, actually, to the markets here in the U.S. at least.
Terry, I'm in China. I'm just wondering what your thoughts are on China AI plays. I mean, at this JPMorgan conference, I mean, people talk about, the innovation that they've been, really impressed by. What are your thoughts on how to play Chinese AI?
Well, that's an interesting question. We're not as expert on that as we would like to be. I think that there's some real opportunity there. The outside of the United States, what I think is something that can weigh on stocks a little bit more is the energy sensitivity. So while the U.S. has been more AI sensitive, outside of the U.S., in areas like Europe, in areas like China, its energy sensitivity has really mattered as much as earnings growth, and it tends to hit a little bit harder through those growth channels. Inflation matters globally, and oil prices matter globally, but they don't matter evenly. And so, outside of the borders of here in the U.S., in China, in Europe, I think that they can be more exposed because energy is a larger input cost. And so that's that would be the risk that we would see when we're looking to play AI outside of the U.S.
At this stage, given what we saw in Beijing last week, I guess for lack of a better expression, the warming relations, the bromance between Trump and Xi Jinping, does that shape the narrative of the Chinese market? Has that changed since then?
Oh, I think it's definitely changed. I mean, I think bromance is probably a pretty accurate way to describe it. At least it sounds like from your chair as well as from our chair. There's been a real, I think, warming of relations between the two countries. I think there was a lot of duress or concern for a lot of the impact that tariffs, for example, put on a lot of companies last year. And restrictions between the two countries and the impact that has on a lot of these international companies, that appears to be softening, to be thawing. And I think that that's only going to be positive, at least from a corporate earnings growth perspective, both here as well as in China. I think that that's going to be something that we're going to continue to see benefit. When we do look at China, the concern that we have has been overcapacity and that growth needing to catch up to the fact that there's been overcapacity in China. And so it has been a kind of an easier play to invest in the U.S. in terms of these themes, but the valuation divergence has put that on our radar in terms of exposure for our own clients. We don't have that right now, but we think that that could potentially be, particularly after the conversations last week between the heads of state of both of those countries, is something that's going to be very interesting and something that's on the radar for us.
Terry, before we let you go, how are you assessing the risk from higher yields? In my conversation with Jamie Dimon just yesterday, he talks about how rates can go higher from here, much higher from here. What's your take on that?
Right. Jamie Dimon's a pretty smart guy, and he's got his pulse on it. I was surprised to hear him say it could go much higher from here. In my head, I said he probably means that it potentially could, but that's maybe not the base case scenario. I could be wrong about that. You would have to ask him. But from our seat, I do think that that's one of the bigger risks out there is inflation and how that can impact growth. The Fed here in the U.S. is probably not going to cut interest rates 2 or 3 times this year. They're certainly not going to do that if we continue to see higher rates because of inflation. So we are watching inflation. We think it's a problem, but this Iran Middle Eastern war, which has really been sparking a lot of this, could reverse fairly quickly. We're not sure when, but we do expect that. And we think that that will reverse the fear, at least, of continued higher prices for a longer period of time than we've already seen it at this stage.
Terri Spath, founder and CIO at Zuma Wealth, thank you so much for your time today. Before we go, here's a look at next week. BlackRock's APEC head of global fixed income will be joining us. Keep it here with us. This is Bloomberg.